You glance at your screen. $34.21. That number is blinking at you. Super Microcomputer Incorporated, SMCI, is up about 2.38% intraday, and you feel that familiar ping of curiosity. Wait, didn't this thing trade in the hundreds? Didn't it once flirt with $1,000? What's happening now is not a simple price tick. This is a cliffhanger in real time, and investors are looking for answers today. Right now the market is wrestling with a mismatch. The story in the order book: huge backlogs for Blackwell GPUs, native liquid-cooled racks shipping to hyperscalers, capacity that others don't have, suggests SMCI is sitting on blowout near-term revenue potential. What's shocking the market is that the stock price still reflects the governance drama from late 2024, not the manufacturing reality playing out in late 2025. A 2% intraday rise is usually just noise. Today it's not. Here's why. SMCI is now trading after a 10-for-1 stock split that dramatically increased retail participation. That changes the psychology of price moves. A little air in the balloon and retail starts sniffing opportunity. Institutional selling after the auditor drama has thinned out. When the institutional exodus eases, even modest accumulation looks like a rally. The company's backlog for NVIDIA Blackwell GPUs, one of the hottest pieces of hardware on the planet, means short-term shipments could double recognized revenue if timing aligns. So what seems like a polite bump is the needle moving from panic to maybe this is accumulation. If you're watching the tape, that's a big deal. You need to carry two uncomfortable truths simultaneously: governance and trust issues matter. Ernst & Young, EY, resigned as auditor in late 2024. The company received an adverse opinion on internal controls, and compliance departments everywhere put a "do not touch" sticker on SMCI for a while. That caused volatility, forced selling, and a trust discount that the market prices in stubbornly. Operational reality is now formidable. SMCI isn't just a box assembler. It has a native liquid cooling manufacturing moat, proprietary racks, proven repeatable manufacturing capacity, and systems that the hyperscalers cannot substitute with simple air-cooled retrofits. Those two things together explain why the stock trades at $34 despite the prospect of huge near-term revenue. The market is weighing the governance scar more heavily than the supply chain sword that SMCI now holds. You need to ask, which matters more to you, the risk of an accounting disaster or the risk of missing out on a hardware supercycle? By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. This is shocking the market, the Q1 print and the hair-raising guidance. Here's what set off the alarm bells and what's twisting investors' stomachs today. Q1 fiscal 2026 actuals. Revenue printed $5 billion, while the street expected $5.8 billion. That was a real miss and punished the stock. It showed how lumpy and sensitive SMCI's business is to GPU arrival timing. Guidance for Q2 fiscal 2026, management now says $10 to $11 billion for the next quarter. Pause and feel that implies a sequential surge of 100%. If they hit it, the annualized run rate rockets toward $40 billion, and at a market cap of roughly $20 billion, you're talking PS, price to sales, ratios that scream oversold or mispriced if the numbers actually land. This dynamic, a missed quarter followed by jaw-dropping guidance, is exactly what produces violent intraday swings and creates the risk-reward profile traders live for. Investors are looking for the proof points that will change the story. If you own SMCI or are tempted, be clear about what will flip the market's thinking today and in the next reporting cycle. Investors are looking for confirmed shipments of Blackwell GPUs and revenue recognition on those sales. Shipments, not just purchase orders, matter. Clarity on component constraints. Was the Q1 miss due to GPU delays, memory shortages, or internal execution? Management needs to say. Evidence the auditor situation is contained. BDO is on the books now, the 10K is filed, and crucially, no restatement was required. Weak controls are fixable, fraud is not. Investors want to see remediation progress. Gross margin recovery. Recent gross margins near 9.3% are dangerously thin for a hardware player. Investors want to see margins improve as scale grows and pricing stabilizes. Conversion of backlog into recognized revenue. The backlog story is only valuable when numbers hit the P&L. If those things happen, sentiment could flip quickly. If they don't, the trust discount stays. Imagine you're building a mega pizza delivery operation. One oven can cook 10 pizzas an hour, but when you need to bake 100 pizzas simultaneously at 900 degrees Fahrenheit, conventional ovens melt down. You can either retrofit 50 regular ovens, expensive, inefficient, or build an industrial-grade, liquid-cooled pizza assembly line that runs at an intense temperature and outputs reliably. That's SMCI versus the big enterprise vendors. The hyperscalers are asking for the liquid-cooled pizza line. Dell and HPE can retrofit, but retrofitting at scale is messy. SMCI built the native assembly line years ago. If you're shipping for the largest AI deployments, you want the native solution. Reliability matters more than cheaper unit pricing. This is why SMCI's manufacturing mode is real. It's not software edge case differentiation. It's the ability to physically build at scale in an era when air cooling is becoming impossible. Two uncomfortable numbers for holders. Gross margin 9.3% is thin. Hardware at scale should see improving margins. 9% suggests pricing pressure or cost issues. Enterprise price wars. Dell and HPE can afford margin compression as a strategic play. They have scale and balance sheet muscle to undercut SMCI in certain deals. That forces SMCI to decide, compete on price to keep the customer or walk away and preserve margin. Your real bet is whether SMCI can turn volume into sustainable margins. The company needs to show that its volume wins don't just multiply revenue but also recover or expand gross margin. If they can win on both fronts, the valuation gap closes fast. If not, this remains a volatile, high-beta hardware story. Here's the ugly truth, SMCI's model is just in time. That's great when GPUs arrive on schedule and systems ship the same quarter. It's brutal when chips are delayed. Strength, when the chips hit and SMCI is ready, revenue jumps. You can see 100% sequential growth in a quarter if timing aligns. That led to the ambitious $10.11 guidance. Weakness, if GPUs slip by a few weeks, the entire quarter slides. Revenue recognition is timing sensitive, the rack ships, the revenue's booked. Miss the ship, miss the quarter. Algorithmic traders and quant funds hate this lumpy pattern. They prefer steady predictability. That explains residual volatility even when the underlying order book looks healthy. Note this as well. Do you want peace at heart? John 1:29 tells us that, the next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight, all I am asking is your subscription. Thanks for joining us today. your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.